If somebody said to you, okay, we are clearly moving into a bear market, how long do you think it will last?
I think that the Fed's trade-off between inflation and growth, it always tries to see a balance. And there are some times when conditions are good, usually when there's not much debt, that trade-off is not difficult to run. We're entering a period of time where there's an great inflationary pressure due to the fact that you produce so much money and at the same time they're trying to strike that balance of the tightening of monetary policy. So it looks to me like an environment like a stagflation kind of environment where both will be a particular challenge. So individuals have got to know, what does that mean? For example, interest rates and debt instruments that they're holding will not have a real return. They have that's adequate. In other words, not enough earnings to compensate for inflation. Last year we had an inflation rate of about 8%. There's a zero earnings. So if people start to think in terms of buying power and realize that cash instruments and debt instruments are going to be a challenge and try to diversify their portfolios, those would be the main headlines that I'd convey in terms of, don't just look at up and down in bull markets and bear markets. Look at diversification and be very particularly worried about whether the real returns that you're going to get on your cash or your bonds. I think too many people are not worried about that kind of environment. If you even study the 70s or other periods of time like that, that would be helpful.